Look closely at the shiny new vehicles driving down your street. They represent a massive burden hiding behind a very beautiful facade. Many people believe that owning a brand new car is a clear sign of success, but the underlying reality is quite terrifying. We have normalized massive debt in our modern society, pretending that huge monthly payments are just a standard part of everyday life. The average price of a new vehicle has recently skyrocketed, reaching an unbelievable $48,000 in today's rapidly changing market. Meanwhile, the average household income remains stagnant at around $75,000 before taxes and basic living expenses are even deducted. This enormous gap between what we earn and what we spend on transportation is quietly destroying the financial future of countless families. People are essentially spending 2/3 of their annual income on a single asset that begins losing value immediately after purchase. It is a mathematical disaster. You're trading your hard-earned wealth for a piece of metal that constantly drains your resources. Let us dive deeper into the real numbers and break down the true cost of driving that shiny new machine every day. Most buyers only look at the monthly loan payment, completely ignoring the hidden expenses that will eventually crush their personal budget completely. When you finance a car today, you are likely facing an interest rate of around 8% on a massive principal amount. That interest alone adds thousands of dollars to the final price, money that goes straight to the bank instead of your savings. But the loan payment is just the beginning of your financial nightmare. We must also calculate the mandatory comprehensive insurance coverage costs. Insurance premiums have surged recently, forcing drivers to pay hundreds of dollars extra every single month just to stay legally protected. Next, we add the relentless cost of gasoline, which fluctuates wildly but consistently takes a large bite out of your checking account. Do not forget routine maintenance and unexpected repairs. Oil changes, new tires, and brake pads add up incredibly fast over the years. When you combine the loan, insurance, gas, and maintenance, the true monthly cost often reaches a staggering $1,200. Think about that number for a moment. Over $1,200 vanishing from your pocket every 30 days for a depreciating asset. For the average family, this massive expense completely eliminates their ability to save money, invest for retirement, or build generational wealth. So why do millions of intelligent people willingly trap themselves in this terrible financial arrangement year after year without any hesitation? The answer lies deeply rooted in human psychology and the immense social pressure to project an image of success to our peers. We are biologically wired to care about status. A shiny new car is the most visible status symbol in our modern culture. Marketing departments spend billions of dollars to convince you that your personal worth is directly tied to the vehicle you drive daily. They sell you the illusion of freedom, adventure, and respect, masking the harsh reality of long-term debt and financial anxiety. When your neighbors upgrade their cars, an invisible pressure pushes you to do the same, creating a toxic cycle of competitive spending. This phenomenon is known as lifestyle creep. As your income grows, your expenses miraculously expand to consume every single extra dollar earned. But the psychological trap is only half the story. The entire financial system is deliberately designed to keep you in debt continuously. Dealerships don't just sell cars anymore. They primarily sell financing packages because that's where the real corporate profit actually lies. When you walk into a showroom, the salesperson rarely asks about the total vehicle price. They only ask about your monthly budget. This simple psychological trick shifts your focus away from the massive total debt and makes the purchase feel deceptively affordable and manageable. To keep those monthly payments superficially low despite rising vehicle prices, banks have quietly extended the standard loan terms significantly over time. Decades ago, a standard auto loan lasted 36 months. Today, 72-month loans have become the dangerous new industry standard. Some institutions are even pushing 84-month loans, trapping consumers in a 7-year cycle of negative equity and financial stress. Negative equity means you owe the bank significantly more money than the car is actually worth on the open market right now. Because new cars depreciate rapidly during the first few years, these long-term loans guarantee that you will be underwater almost immediately. If you try to sell the vehicle or get into an accident, you will literally have to pay money just to escape. This is the ultimate wealth destroyer. You are borrowing expensive capital to purchase an asset that falls in value every single day. The financial industry knows exactly what they are doing. They profit massively from your desire to look wealthy while keeping you poor. Every dollar you send to the auto lender is a dollar that cannot be invested in stocks, real estate, or your future. Imagine if you took that $1,200 every month and invested it in a simple index fund for just 10 years. Compound interest would work in your favor, transforming those monthly car payments into a massive portfolio that provides genuine financial security forever. Instead, millions choose the temporary thrill of a new car smell, sacrificing their long-term independence for a fleeting moment of excitement. We must break this destructive cycle immediately. The first step is acknowledging that a car is merely a tool for transportation. It is not a reflection of your character, your intelligence, or your worth as a human being in this complex modern society. To build real wealth, you must create a margin in your life. Margin is the vital gap between your income and expenses. Without a healthy financial margin, you are constantly stressed, living paycheck to paycheck, and entirely vulnerable to any unexpected emergency that arises. The easiest way to widen this margin is to drastically reduce your transportation costs by making smarter, more rational vehicle purchasing decisions. Consider buying a reliable used car that is 3 to 5 years old. Let someone else absorb the brutal initial depreciation hit. Modern vehicles are engineered to last well over 100,000 miles with basic maintenance and careful driving habits on the road. A well-maintained used car provides exactly the same utility as a new one, but at a fraction of the price. Pay in cash if you possibly can. Avoiding financing entirely is the absolute best way to protect yourself from predatory lending practices. If you must take out a loan, follow a strict rule. Never finance a vehicle for more than 36 total months. If the monthly payments on a 3-year loan are too high, it means you simply cannot afford that specific car yet. Lower your expectations and find a cheaper model. Your future self will deeply appreciate the financial security you are building right now. Another powerful strategy is simply to keep driving your current vehicle as long as it remains safe and mechanically reliable overall. The cheapest car you can possibly own is usually the one sitting in your driveway right now, fully paid off and functional. Ignore the minor scratches and the outdated entertainment system. Those cosmetic flaws are the beautiful badges of true financial discipline and wisdom. Every month you drive a paid-off car, you are effectively paying yourself instead of enriching a massive multinational banking corporation today. Take that former car payment and automatically direct it into a high-yield savings account or a diversified investment portfolio every month. Watch how quickly your wealth grows when you stop fighting the heavy anchor of vehicle depreciation and high-interest consumer debt loans. This mindset shift requires immense courage. You must be willing to look less wealthy than your peers in the short term, always. Your friends might drive flashier cars and post glamorous photos, but many of them are secretly drowning in overwhelming financial anxiety constantly. True wealth is what you don't see. It is the peace of mind knowing you are completely secure against economic downturns. It is the freedom to change careers, start a business, or spend more quality time with your family without fearing the bills. You cannot achieve this level of profound freedom if you are constantly sending a huge portion of your paycheck to a dealership. The middle-class illusion is built on the dangerous premise that borrowing money to buy depreciating liabilities is perfectly normal and acceptable. We must reject this toxic narrative completely. Wealth is not about what you drive, it's about what you actually manage keeping. When you finally step off the endless treadmill of auto upgrades, your entire financial landscape will begin to change for the better.
you will notice that the pressure to constantly perform and impress strangers suddenly disappears, leaving you with incredible clarity and profound peace. Let us examine a practical example of two completely different approaches to transportation and wealth building over a 10-year time span. Person A buys a new car every 5 years, always carrying a massive loan and paying endless interest to the banking system. After a decade, Person A has absolutely nothing to show for their money except a rapidly aging vehicle and immense financial stress. Person B buys a reliable used car with cash and invests the equivalent monthly payment into a diversified stock market index fund. After that same decade, Person B still has a functional car, plus a massive investment portfolio generating passive income every single day. Person B has successfully bought their freedom